calling to order the meeting of the City of Wilsonville Budget Committee for February 2nd, 2022, and this is our mid-year budget review. And we're going to hear from our finance department today, get a really good overview. Before we ask them to start, I would like to ask each of the members of our budget committee, who are the citizen members to begin with, to introduce themselves and give a little background, and then we'll go to the city councilors, the members who are also on the city council, and just give us a couple of sentences, starting with Alicia Moulton.
Hi. So yes, my name is Alicia Moulton. I moved to Wilsonville a year ago. I live here with my husband and my 4-year-old daughter, and I am the budget manager for OHSU Healthcare. And thank you for letting me be here.
Great, thank you. And I'm just going to go across the screen here in the order that I see. Oh, here is member Sam Skull.
Hi, Sam Skull, General Manager of Manufacturing Company in Tualatin. I've lived in Villebois for about almost 11 years now, and past member of the Budget Committee, past member of the DRB, one of the DRB teams. I think I was a member with Mr. O'Neill there at one time, and glad to be back in the Budget Committee and back in the process.
Thank you. And now we have on welcome member Daphne Lagarza.
Good evening, everyone. My name is Daphne Lagarza. I've lived in Villebois for about 4 to 5 years now, and I have to do the math, so let's go with 5 years. And I actually work in Salem in a semi-independent state agency called Oregon Travel Information Council. I've been on the budget committee for a couple years now, and it's been very rewarding and very informative. So thank you very much for having me on this committee.
Thank you. And member Sean O'Neill.
Yeah, I'm Sean O'Neill. My family and it was 2 of us when we arrived. Now we have our son, Tenzin. We've been here 14 years. Been a past DRB member, and this will be my 2nd year on the Budget Committee. I really enjoy it. Love volunteering, and look forward to working with all you guys.
Thank you. And member Katie Hamm.
Hi, I'm Katie Hamm. I have been in Villebois since 2006. I live here with my husband and my 2 daughters who are 8 and 10, and I actually grew up just outside Wilsonville and went to Wilsonville High School, and I do mortgage lending for Umpqua Bank.
Thank you. We'll go to Budget Committee member Kristen Akervals, who's also Council President.
Hi, it's great to be here this evening. See, I started with City Council. I was elected in 2016 and then again in 2020. And prior to my time on council, I was on the Development Review Board, like some of the rest of you as well. And I actually served on the Budget Committee for the school district prior to my time on council as well. And that was a good experience and an interesting experience. I get pretty excited about our budget document that we get in the spring. I think it's one representation of the values of our city. And that's something that I really care about, just personally, but also as a city council member. So I look forward to spending some time with you all in our meetings this spring. Thank you.
Thank you. And now to Budget Committee member Charlotte Leehan, who's also City Councilor Charlotte Leehan.
Yes, hello. I've been around a while. I can't give you all the dates like Kristen can, but anyway, I'm coming to the end of my term on City Council at the end of this year, and so I'm taking up a variety of other things. But I have certainly enjoyed serving City of Wilsonville as a mayor previously and as a county commissioner. With regards to the budget, I remind people that I think it's important to have people on budget who are good with numbers, good with budgets, and like spending time with budgets, but it's also important to have people who are representing the values of the community. In other words, we don't need just a bunch of CPAs on the budget committee because we have some very well-qualified bean counters on our staff. We need people on budget who can bring the values of the community to the budget process. So that's my budget comment.
Thank you. And now to Budget Committee member Joanne Linville, who's also in her other life, Counselor Joanne Linville.
I'm happy to be here. It's always good to be on a committee where hopefully the voices of our citizens are the loudest. And so I look forward to working on the Budget Committee every year. And and it's nice to see some new faces, too. I was appointed to City Council in 2019. I took the remaining 18 months of Susie Stevens' position when she resigned, and then I was elected in 2020 for a 4-year term. I have obviously served on the Budget Committee since my appointment, and I look forward to it as well. I think as Council President Akervals said, it does represent our priorities because it tells us the roadmap of where we are going to put our efforts and our resources on behalf of the community. And so I take it very seriously as well. In my work life, I was responsible for numerous budgets as a vice president at a college. So luckily I had administrators in the academic area, student services, and areas that would contribute to that process, but many years of working on budgets. So I'm happy to be here. Thank you.
Thank you. And Budget Committee member Ben West, also known as Councilor Ben West.
Hi there, everybody. Can you hear me okay?
Yes.
Thank you for your patience. I just got home from work. It's still in scrubs, but I work full-time as a registered nurse at OHSU at the Knight Cardiovascular Institute, helping people with their hearts. And I was elected to the City Council 3.5 years ago. In 2018, started my term in 2019. I will echo the same thing I heard Councilor Linville say about this. Really does show our priorities. It shows what we kind of, that old saying, you put your money where your mouth is, right? And so I also think the city has done a very good job being fiscally responsible, and it's allowed us maybe even do other things that other cities aren't fortunate enough to be able to do, because we have been good stewards of the resources given to us, and we always look through that lens when we're making decisions. I can think of instances where the members of this council have been very much like, well, how does this impact the person living right next to me, or somebody that's a more vulnerable population, or how is this going to expand something to somebody that doesn't have a service already or need a resource. And so I'm really proud of Wilsonville's ability to be innovative and creative during the budget process. And I think that we have a really great track record of making sure we're doing really financially sound things. And so this is an important task force to be a part of.
Thank you. Well, thanks everybody for those words, and I've met all of you, so I will and I'm really glad to have all of you on this committee. I will go directly to our Director of Finance, Keith Katko.
Okay, all right, let's get started. First of all, can you see the screen? Does this pop up as the Budget Committee mid-year? Okay, we're good. I'm Keith Katko, like the mayor mentioned. I'm the city's finance director. This will be my 22nd assist with the city budget process. I've been with the city 22 years, starting in 1999 at the start of the Y2K process here at the city. And I've served in a variety of roles as an accountant, a finance operations manager, the assistant finance director, and now the finance director. And before that, I was with various roles of accounting through the community here in Portland. So I've been preparing financials, data mining, and analyzing financials a long time. And when I say assist with the city budget, I really mean it as like, with almost every endeavor here in the finance department, it is really a collaborative affair. And tonight I'm here this evening with the city's assistant finance director, Catherine Smith, who has been with the city a little over a year now and has a vast background in both private and public accounting. Catherine has been immensely helpful in helping the city in the department in implementing Munis, the city's new ERP system across many of the functions, most notably AP and payroll. As you may remember, the city migrated financial software last year that included the general ledger, the accounts payable, payroll, project accounting, and budgeting. We're still very much refining that program, as well as we are still in the middle of implementing additional functions like utility billing, which will be rolled out this June, as well as the permitting, business licensing, and the transit tax collection. So we got a little more ways to go on implementing the full Munis ERP system, but we're in the middle of it. Not here on Zoom tonight, but potentially watching us on YouTube are two additional MVPs in the finance department for budget prep here, and that's Dylan Jenkins, or the city's senior accountant. He's a CPA, he's a certified fraud examiner, he's a Excel wizard, and he's been with us 3 years. Also, Cricket Jones, she's our finance operations supervisor. She has been doing a lot of heavy lifting and moving the city towards implementing the utility billing function, as well as she's been an immense help, as she is every year, in helping with the budget process. Also, as well, really all the managers across the city, for which feeds us all the data that we're going to share with you tonight or this evening. So that's kind of the introduction, and this is kind of the agenda, why we are here. This is the where, what, and how of what's going to happen tonight. This presentation is really part of a continuous process of municipal budgeting for the city of Wilsonville, which is to promote an open, interactive process while increasing public awareness, engagement, and transparency. So the first task of really this tonight is determining where the city will land financially at fiscal year end 22, June 22. As we need that balance to really, or that estimated balance, is to kick off where we're going to start our budgetary process. Many of you got notice, and we posted it on the city's website. We completed the annual audit of the city, which is where we are audited by independent certified public accountants to attest to the financials of the city. That's posted on the city's website. That's called the Annual Comprehensive Financial Audit. And with that, those audited financial numbers, we have updated 21-22 beginning fund balances, and that's what we are going to show you tonight as the starting point for our year-end estimates. We had an idea of where we were going to start last year during budget, but that trues up that beginning fund balance. So you'll see that in the year-end estimates tonight as we go through them. And we sent out about 2 weeks ago, I think, the quarterly report for Q2, which is 12/31/21 financials. That's the actual position of where the city is at 12/31. It's kind of a budget basis financial report because we don't do a lot of accruals. It's not a true GAAP-based financial. We do that at the end of the year, but it gives you a pretty good idea budgetarily where the city is at 12/31. So we take those two data points, and then we go and work with all the managers across the city to kind of extrapolate where we're going to end in fiscal year 22, and that's the basis of how we start budgeting for next year. Also tonight, it's kind of a budget reconciliation night. We're going to explore the gap between the expectation when we set the budget up last year and the reality of where we are. And just to kind of step back on the city's budget, when we talk about reconciliation, there's basically 3 levels of control here at the city. We have the city budget, and in May, when we go back to approve the budget, we're going to approve a total adopted budget. Last year's budget was $241.8 million. That's the whole comprehensive combined city budget. But what that represents is the combination of 24 separate budgets for each fund. That's another level of control at the fund level. And then we go down one more level to the program level within each fund, and that is broken out by department, which is, the finance department, the library department, and so on and so forth. Each one of those departments has a budget, as well as we have a debt service budget, a capital projects budget, a transfers budget. Any money that moves from fund to fund needs to be budgeted under transfers, as well as with municipal budgeting and government budgeting in general. You need to budget everything. So the balance is really the contingency, and that's how we get to that huge $241.8 million budget. But tonight, particularly, we're going to focus on the operating budget, which is that department level budget. And that's really kind of the cost of running the city. The city's operating budget is $47.5 million, and what that includes, all the departments, their personnel budget, their materials and service budget, and their capital outlay budget. Capital outlay refers to anything over $5,000. Basically, if it's a piece of equipment over $5,000, it needs to be categorized separately, and then we actually have to depreciate that over the life of that particular asset. Mostly that is going to refer to vehicles, copiers, or computers, and that kind of stuff. So what we're going to focus on is that operating budget across the funds. And then I'll do a quick one-slide primer on the kind of the financial mechanics of the city here to get us into the flow a little bit better here. And any time tonight, you can also stop me.
Hey, Keith?
Raise your hand. Yeah.
Okay. I just neglected to mention at the top that this is an informal meeting, so I would encourage any member of the Budget Committee, as we're going through these slides, if you have a question, just pop that raise hand feature. We'll pause and answer the question. I just want to make sure that you all know that, yeah, we have this presentation, but this is really meant to be a two-way dialogue. So if you have questions, please do raise your hand. The mayor will recognize you, we'll stop the presentation, and we'll answer the question. Thank you, Keith.
Absolutely. And these first few slides are really just kind of wading in here. I'm just kind of prepping in, and then we'll get into the actual data of the year-end financials. I just wanted to kind of preface it a little bit by how we view the world here, how we view this data. The city, of course, uses fund accounting. I know many of you are in private industry where that's kind of maybe a little bit of a foreign concept. Fund accounting is really, the emphasis is on accountability. Basically, we have a fund established for any resource that has a limited use, that limited use is either set by city council or another government agency. The city has 24 funds, like I mentioned. We have 11 operating funds, and you'll see next to each fund, I've listed in parentheses the financial resource that needs to be tracked and monitored within that fund. And the fund structure is the best way to do that. The general fund, of course, houses the property taxes. Our community development houses engineering permits and fees. And that fund has been established by City Council to track those revenue sources, the use of those revenue sources in a particular manner. So it's established in a fund. Whereas like the building inspection fund, that is, the revenue source is permits, and that is legally required by the state of Oregon that building inspection fees and fines or whatnot be tracked in a specific fund. So that is an example of an outside agency requiring us to set up that fund. And down the line, you'll see we have a transit fund, a road operating, which is the gas tax the city receives, road maintenance, which is on your utility bills, and then the water, sewer operating. Those are all utility fees, and they are tracked separately in separate funds. So we have 24 funds here at the city. 11 of them are operating. We also have the 7 SDC funds, which are the System Development Charge Funds, and those are assessed upon development of, an industrial warehouse or a, residential house. Those fees get assessed at that time to help pay for the infrastructure required for those developments. And then lastly, we have the capital funds. The capital funds really typically don't have revenue sources or other than from these operating funds or the SDC funds. And so how the fund structure works at the city is the operating funds are moving money into the capital funds, or it's coming from the SDC funds to pay for that development, whatever it is, a bridge or sidewalks or whatever. The city, of course, has engineers on staff, and the monitoring of those capital projects takes oversight and administration. So some of that money actually comes back into the community development or the general fund as an overhead charge. So, for example, there may be instances where we can use road operating to pay for a capital project, but that capital project has it has administration charges, or it has, our city engineers have to work on that, and they track their time via software tracking to assess their time and to get reimbursed, and that is coming back into the community development fund or the general fund. So that's kind of the life cycle of fund accounting here at the city. Tonight, we are going to just focus on those operating funds because, in general, that's where all the resources are. Oh, okay. The mayor.
Councilor Linville has a question.
Mr. Katko, I'm used to indirects that are allowed under certain money, certain funds. And so would those monies be considered indirect funds that we could charge back to those CIP funds? Is that kind of a similar concept?
A little bit, yeah.
And the other question, I guess, is, excuse me, is that the capital funds, the employees that actually track their time, and I understand that you do it on software. Is that time and effort like it used to be with the old sheets where we do time and effort in order to charge back?
I'm sure it is. It's like when they work for an accounting firm, it's kind of billable hours, the professional engineers, they are working on a specific CIP, so they charge their time to that through the software, and then we get those reports every month in accounting, and then we do it's more of a direct transfer. But you did bring up a great point, when we talk about indirects, too. We have the general fund here, and the general fund in the city houses all the central government departments, HR, human resources, legal, accounting, general administration. And so those functions also get assessed to these other operating funds. Of course, the transit fund needs human resources. They need accounting. So that's what the indirect charges are. And that line in the budget is happening at the transfers control level. There's money being, and we'll see that when we start looking at the statements here, when we go into like the transit fund, you'll see an indirect overhead charge. And that's like for transit, that's their allocation of HR, accounting, legal charges, and that money gets moved back as a revenue source into the general fund, and it's an expense as the in the transit fund.
And do you have a limit set on that indirect in terms of a percentage that you can charge back to the?
Yeah, well, yes, we have a allocated methodology that gets reviewed every year by our independent auditors as part of the review process to make sure it's not, it's within bounds of reasonableness. Yeah, we can't just move money without that kind of oversight or authority. So it's part of the compliance audit that happens. That's kind of the fund structure. Again, we're going to focus on the operating funds, because like I mentioned, that's where the revenue is. And really many of the decisions relating to the wider vision for the future of the municipality revolve around these funds to the extent there's funding. Service levels are set to community expectations. Alignment is made to the city mission, which Prince wrote out here. And it's really, within those funds, it's also geared towards the promotion of city council goals. I've listed out the goals for the current year. The council's probably well aware of those. There will also be reproduced in the budget book for further examination. And I think they're actually available online too. So that's kind of where the operating fund, the background of that as well. Oh, so before I get into it, I think I tried to do a little summary of the takeaways, perhaps. The three takeaways I think we're going to get out of looking at these operating funds tonight is basically they're on target to what our budget expectations were. Each fund is performing more or less as expected. There are a little bit of some caveats, and that's what we'll get into tonight to explore some of the variances. A couple of the caveats that we probably didn't anticipate or fully appreciate at the time last year was really the low interest rates that are occurring right now. That has ramifications for the city budget in terms of the city has a roughly $150 million investment portfolio. About $50 million of that we invest in the Oregon State short-term bond fund. We're limited to we're only available to put in $50 million. We're capped at that. That fund is earning 0.4% interest. The other $100 million we have to invest in the city. By the city's investment policy, we invest in U.S. Treasuries. We're allowed to invest a portion of it in corporate debt, and as well as other governmental agencies like Federal Farm Credit Bank or Freddie Mac, Fannie Mae, those types of quasi-federal agency type organizations. We can invest in that debt. In the past year, some of that investment yield has been as low as 0.10%. So it's been, and that has a ramification for the city's budget, just those low interest rates. On the flip side of that, we have this weird economic situation where we have really high inflation. So the inflation I've read is rising at the fastest pace since 1991. I'm not sure, but the CPI Portland, December 20 to December 21 is 6.8%. CPI. U.S. average right now is 7%. That, of course, also has some ramifications for our current budget and then what we're going to have to face really next year as well. So those are kind of the two big instances, I think, as a takeaway. Another takeaway I didn't put on here is, of course, just the pandemic in general. And the ramifications of that, the workforce here in the Portland area or even in the country, there's been a lot of vacancies and there's a lot of jobs shifting around. And the city has faced that a little bit too. You're going to see that across some of the departments. We're going to have vacancy savings. Of course, that causes other issues within the city budget as well. When we have vacancies in personnel, some of the departments have contracted out. In terms of like perhaps the engineering department, we still have that immense need for those services. So when we're not able to get the staff, we're able to get it outsourced. So there's some cost shifting sometimes between personnel services and materials and services, which you will see tonight. But the final point, I think, really locally is we've got strong local growth here in Wilsonville. That's population-wise, as well as permit and construction activity happening. Industrial inquiry and activity is at recent high with multiple projects taking shape. There's 2 large industrial buildings in planning review for the Coffee Creek industrial area right now. That has, the added benefit of not only helping the Building and Community Development Fund right now, but once those buildings are operating, that will create tax increment in that Coffee Creek industrial area, urban renewal area. So we're finally starting to see a little bit of movement of growth in that Coffee Creek industrial area for that urban renewal district. Of course,
excuse me. I see I have a question here from Member West.
Hi there, can you hear me?
Yeah.
Quick question I just had about the high inflation that we're facing. I've been in a couple public meetings where their staff is estimating it could be as high as 10%, that, maybe 7% now, but still rising potentially. And I guess my question is, I'm trying to get an understanding about how long we would estimate this would last. Is this till the end of this year? Do we see this projected out multiple years? Is this through a whole fiscal year? What does inflation, and maybe in layman terms, do to our budget specifically? And what protections can we do to not be hit as hard by this kind of interesting economic times that we're in, where people are really feeling that pinch? So I don't know if you could, I know we're going backwards just one point, but if you could kind of answer those questions.
No, I think one of the biggest, here at the city of Wilsonville, we have a materials and service budget. The 3 largest materials and services we have are the outsourced operations of the water treatment plant, the outsourced operations, the wastewater treatment plant, as well as we outsource our police force. And I don't know the specifics exactly, but I'm guessing at least the water treatment plant and maybe the wastewater treatment plant have clauses in those contracts to index to inflation, which is the CPI index. So when we have a CPI index from December 20 to 21 of 6.8%, and I'm not certain on those contracts, so but I know in other contracts in general, it's not uncommon to see them indexed to CPI. So what that means, of course, in the budget is that next year, those things are going up 6.8%, perhaps. And so we'll have to look case by case, and we'll get into that when we get into the budget. But that would be the clearest link to that inflationary rate. And yeah, I can't attest or to where inflation is going. I mean, we have the ongoing supply chain issue here in the world or in the U.S., which is, who knows what's really causing that. I mean, but there's just a lot of macroeconomic forces that really come home to roost locally wherever you live. So, so that's kind of the reality, I would say, with that.
Member Skull?
Yeah, I guess I have a question regarding the inflation also in regards to the CIP projects and also the materials and supply chain. Is there the timing of, there's inflation issues, but there's also timing issues out there in the market. What would be the impact there from timing in terms of, project delays, so forth and so on? How does that affect the budget?
Yeah, well, the project managers for each individual CPI, like we have a couple the biggest CIP we have right now is the expansion of the water treatment plant. It's going from, I think it's 15 MGD to 20 MGD. It's a huge CIP project that is unfolding in the midst of this. So it affects it. I don't have, I can't unwind exactly on the fly. Timing is everything. Yeah, I mean, the supply chain, the accessibility to steel, those kind of international lumber treaties and everything really comes into play. On the cost side, on the flip side of that, you look at the low interest rate, borrowing costs have never been cheaper. So those things are really out of our control. Is that the microeconomic issues, the macroeconomic issues, fiscal policy, monetary policy, those things are run way above our municipality level, of course, and the ramifications do come home to roost. I can't, we'd have to go by project, but they're definitely on the mind of the project managers.
So let me see if I can bring it down to a local level, because it really does get into esoteric conversations about Fed monetary policy, supply chains, and all the stuff that we've all become more familiar with than we'd like to. But where it manifests itself in our operating and capital budgets is, cost increases are going to obviously mean that projects are going to cost more, materials and services are going to cost more. So whereas in the past, in the 11 years I've been here, we've always done nothing more than a 1% increase in materials and services. We're going to have to look hard at that this year to see if, that kind of flat line estimation of, escalating costs is reasonable or not. And it'll vary on each budget. So when we look at capital projects and you talk about supply chain issues, and if you're building a bridge, you need steel, are we really looking at our costs and saying, do we have enough contingency in there to deal with, the escalating cost of steel? It really does come down to a more micro look at every budget, every line item, every material, and every service to say, are we being reasonable in what we're asking here? Because what I don't want to do is come back and ask for a mid-year budget review for something that we didn't contemplate. So those conversations that we're having tonight will be the same ones that I'll be having with my staff as we go into budget prep for this year. We'll be having those hard conversations about, what resources do we have available? Are we being reasonable? Do we need to put this project off for a few years? Because I don't think anybody in this room or anybody that I've been reading knows when this supply chain issue and inflationary pressures are going to back off. I've heard end of 2022 to mid 2023. So I think it's going to impact next year's budget for sure. So we may have to put some things off that we thought we were going to do this year. We may have to ask for a little bit more for certain line items, materials, and services. So I think we'll have a better idea of our local operating budget when we come back to you in April and May.
Thank you.
Yeah, and we're seeing here in the city as well, development is moving forward privately. We have got those Frog Pond residential area growing. We also have that new urban renewal program. It's called the WIN program. We have a major company coming into Wilsonville, Twist Bioscience, and they're doing major upgrades on their property out there, as well as we have a $24 million performance art theater over at the high school being developed. We have 3 industrial warehouses right now under construction in the city, and the state of Oregon, the Department of Administrative Services, is moving a large chunk of their scientific operations throughout the state, condensing into the former Microsoft building, which is a $59 million construction project underway right now in the city. So, and we'll see that when we get here to the Community Development Fund and the Building Inspection Fund. The first fund we'll look at tonight, of course, though, is the Transit Fund. And also just to step back and real quick to kind of explain what you're looking at here, this format's going to be recreated on each of the operating funds we look at tonight. In general, there's going to be two slides for each fund. The first slide is going to be the revenues, and then the second slide will be the expenditures. For both the resources and the requirements, the major cost category or the major revenue category will be here displayed by rows, and the corresponding columns will list the budget, the year-end estimate, remaining balance, variance, and any kind of comments. So it's really that variance, the remaining balance, and the kind of the comments that we're kind of trying to flush out and discuss a little bit what's happening. So for the Transit Fund, we are anticipating moving from a beginning fund balance, which is always the bottom line here on the resources, currently at $7.6 million, and this is the number I said has been updated based on the audited financial statements this past June, or this past December that were completed. So that is a audited financial number. And you can see it's favorable from what we had projected. So there's a little bit of $114,000 that, to our benefit, that we're coming in better starting that fund off. So for this fund in general, we're anticipating that beginning fund balance of $7.6 million to an ending fund balance at year-end 2022 of $8.2 million, an increase of $579,000, and I'll go through and show you how we get there. Smart operations are mainly funded by a 0.5% tax on local area payroll. It's an employer-based tax and a self-employment earnings for earnings within the city of Wilsonville. You may remember, or it's been a while, but Smart split off from TriMet back in 1989. And the trajectories of their tax rates have never been the same. Smart operates at a tax rate roughly 36% less than TriMet. TriMet's payroll tax rate is 0.78. Smart is at 0.5%. So,
excuse me, Keith, I have a question from Councilor and Budget Member Linville here.
Yeah.
I just want to kind of get this question out in the very beginning. So as we look at these individual funds and we look at the variances up and down, is it the policy at the city to transfer money into individual funds to cover variances that might be below the budgeted amount, or is it the total bottom line for all of the budgets combined for the city?
It's
in terms of determining whether we need to move contingency funds or not.
It's the total bottom line of the program budget. So let's say that, like Director Katko mentioned earlier, we have a vacant position and we have a personnel line item that's allocated for that position. It hasn't been filled for whatever reason. We determine that we just can't fill it because there's not enough qualified candidates. So then we may have to move some of that money into contract services. So as long as they're living within the total bottom line number for that budget, then we don't care if they're spending more on contract services, if they're spending less on personnel, as long as they're living within their budget. Another example might be, let's say we had an unexpected emergency. Say, for instance, a ice machine on the second floor of City Hall decided it wanted to leak on a Saturday. And let's say, for instance, it caused, I don't know, $500,000 worth of damage. We would then have to go back to City Council and say, this ice machine broke. It caused this amount of damage, so we need to fix it. We didn't budget for it because it was unanticipated. We would have to go ask council to do a mid-year supplemental budget, which requires a public hearing. So those are the two examples I would say that are most on point to your question.
So clarifying, you're saying within a fund, when you talk about a budget, you're talking within a fund.
I'm referring to the program level. Now, the general fund, okay. Yeah, the general fund has several program budgets underneath it. So we basically budget by program, even though a program is within a given fund. We concentrate and focus and hold our department heads and managers accountable for managing the programs that they're responsible for. And 99 times out of 100, every department's going to come in probably in the 96 to 97% expended of what they've asked for in their budget. We always come in under budget with very few exceptions.
And keep in mind, we only need a budget authority to spend money. On the resources here, we put a budget in mostly just for, conceptualizing how the fund is doing financially, but the legal control is really oriented towards spending authority. And one other point to Brian's comment is within these funds, there are many, many, many accounts. The city has like 2,800 general ledger accounts, and a lot of those do have budgets, but that's really for managerial control. The level of control for the council and the budget committee is like I mentioned, at the whole department level. Otherwise, if we start going down to that 3,000 account level, it's really can be quite nauseating, not nauseating, it's just too much. So we use these roll-ups, and it's really at the department level.
I see Councilor West, Member West.
Just so I can understand, I'm not, I don't look at spreadsheets often, so want to make sure I'm understanding this correctly. For example, we look at the intergovernmental federal, we budgeted 1.8, the year-end estimate is 2.7. Does that mean we had an overage? We had an overage and leftover amount of 906,000, so that's a variance of 49%. But then if you look right below it under the state one, is that where we came up short 1.5, and then that's 75% in the other direction?
You got it.
I've got it.
Yep.
So if I look at the bottom, are we upside down 344,000?
On resources, I wouldn't necessarily say it's upside down. Yeah, I mean, in one sense it's upside down, but it's still very, very healthy. It's just we'll get to this intergovernmental state revenue funding. We don't anticipate receiving that 1.5 this year, but it will be rebudgeted next year. So it's not lost, I would say. Okay.
And that's an example of a resource that we would not spend unless we received.
Right.
And so, and then on the ARPA funding stuff, that's money that we received after Congress passed the American Rescue Plan Act. So we weren't anticipating that, but we received it.
Okay.
One other just little interesting comment about that transit tax, we're anticipating $5.2 million. That represents over $1 billion in wages and self-employment earnings in the local area as well. So we're taking in about $1.3 million a quarter. We send those transit tax forms out. That's something the finance department does quarterly. A lot of it is remitted through local area or the payroll providers for the large companies. That they automatically send it back into the city. So when they process the payroll for those companies. So intergovernmental revenue, as Councilor West mentioned, typically is the second largest revenue source for SMART, and we're anticipating $2.7 million next year. Part of that is the SMART was a benefactor of relatively unexpected $1.6 million congressional appropriation, I guess, in 2021. And that was meant to, the Congress declared transit operations as a vital part of the infrastructure of the United States. So they have underwritten and supported transit agencies across the country. There is another funding stream coming for SMART in the dollar amount roughly of $4 million, and that's a different congressional appropriations. It's called the American Recovery, ARPA, something to that effect. I didn't put that, or that number, the $4 million is not reflected in that year-end estimate. It'll probably actually come next fiscal year, so we left it off. And as Brian mentioned, that $2.7 million, part of that money is the $1.6 million that we've already received, and we can spend that on operations in the fund. And the SMART also receives just a yearly allocation of federal dollars that is typically spent on buses and other capital outlay. To the extent, and that dollar amount of $2.7 million is reflected there, assuming we're going to spend it on those buses, and that is assuming that they're going to be delivered by June 30th. So on the next slide, you'll see that we have budgeted the anticipated expense of those buses, but this is one of those supply chain issues, or the delivery is important. If it doesn't come before June 30th, it needs to be pushed into next fiscal year, and then we rebudget that intergovernmental revenue as well as the expense. So it will get pushed into next year if those buses don't come. And we've received one bus already. Buses are expensive, and they have long lead times for delivery. So the budgeting is really tricky for those.
Councilor Linville, Member Linville.
I just want to clarify, make sure I understand correctly. We hear sometimes that there is concern about the payroll tax, the transit tax on total payroll. But if I'm looking at this column of the year-end estimate or even the budget, the $5 million coming in from the payroll tax only represents about 1/3 or 30% of the total budget for the transit fund resources. And that money's coming in out of other resources represent the majority of the funds coming in. And then I just want a clarification if I'm thinking that correctly. And then the other thing is that the amount that is actually charged in the transit tax for SMART is a lower amount than if we had TriMet here in Wilsonville. Is that, and am I correct on both of those two assumptions?
You're correct on both points. The TriMet tax rate is 0.78, which is 36% higher than the SMART payroll tax, which is 0.5%. Half of 1% is the percentage. So yeah, we are 36% cheaper in our tax rate than TriMet. Two comments to get additional to kind of add a little bit of context to what you said. We're expecting a pretty strong transit tax total dollar amount, the $5.2 million. Part of it is the composition of the companies, or the city of Wilsonville has benefited by having such large multinational companies that are more high-tech oriented. So a lot of those payroll issues and the finances of those companies have been somewhat more immune from the economic difficulties that some of the smaller and mid-sized companies are facing. So that's why we really have seen a stable revenue source in that transit tax. And to what Councilor Linville is saying, the composition of the funding of our transit system has changed over time. It used to be solely a transit tax funded endeavor. We've been blessed, for the past number of years to have received federal funding at increasing higher levels. That certainly has helped it. Generally, those federal funds have to be spent on capital outlay. So it's the buses. That is a big contribution, though.
Yeah, I did want to make a comment here about our businesses, and as we look at our budget and planning for the year ahead, also look to the past and how the city has chosen to invest in and developing areas like Coffee Creek and Basalt Creek, and which are the new areas, and the industrial development areas that we now have that our city council and citizens have supported developing, and going to meetings with other cities that haven't got the kind of land that we have, you see how important it is that people have been forward thinking and looking at ways to attract and retain those higher wage jobs.
Right.
I see Councilor West has a hand up.
Yeah, one more quick question. I know that we're starting back up some of the rates with SMART, and a lot of that, was because of the pandemic and things. We were trying to be supportive of our community. What is a typical estimate of revenue that we would actually see from fares of service? And that since I'm just assuming that number is unusually low because of the extenuating circumstances.
Well, yeah, I would feel more comfortable if Dwight's in the chat, have him answer that question. But I can tell you that we've gone mostly fareless just because we did receive the money from the federal government to help offset that. And I would also say that fares have never been a big part of the SMART budget, ever. I mean, we're talking infinitesimal in terms of the overall operating budget. So they were never anything that and in fact, I would say that if you ask the staff who had to count all the quarters and the time it took to count the dollar bills, that it was more trouble than it was actually worth. So
So even in a standard year, Brian, you don't see like even that number significantly higher, probably, or anything. It's a small line item.
Yeah, I mean, I would say the only fares that make any sense is the 1X from Salem to Wilsonville. Other than that, it's, yeah, I think Dwight would be a big advocate for just not doing any of them, which I think we're mostly there now. So yeah, fares have never been a big part of that budget. Another important caveat, as they're looking at this fund, keep in mind that this is not a typical look at the SMART budget, because we have received a lot of stimulus. We also have STIF funding, which was the HB 2018, or I'm probably not saying that right, but that was the tax on everyone basically, and it's based on income, and that goes through TriMet, and then it's parceled out to all the various transit agencies, and that has two separate funding sources, and we'll get into that more during the actual budget as well. But I'd say this budget has gotten bigger because of a lot of the federal stimulus, so if you really wanted to do an average look at this budget, you probably have to go back and do the last 5 to 7 years and really take a look at it for it to make more sense than it does right now, because what you're seeing right now is an inflated budget due to extenuating circumstances that probably won't be there 2 to 3 years from now.
Thank you.
Yeah,
it's Director Katz.
Yeah, let's just tag on a little bit to Brian. We do have that additional allocation of $4 million from federal appropriation next year. So yeah, but longer term than that, it's hard to say what the future holds. One quick comment that Brian mentioned on the STIF money. This is what the intergovernmental state grant is, and that's that it's like a 0.1% on employees. It's an employee tax across the state of Oregon. It was passed on that Keep Oregon Moving bill back in 2017. That's our allocation of it. It is broken into two parts. Part of it is a formula, and part of it is competitive grants. That $508,000 is part of the competitive grants that we did get, and we have that money. The $1.5 million is the formula based, and that's what we're still in negotiations with TriMet on how to, what that's going to look like for the city. To the extent that we don't work it out this year, it'll be in next year's budget, and it will also entail the purpose of the STIF formula funds as well is to expand the service. So in terms of greater interconnectivity and the like. So we'll see what that looks like come budget season. So, one more. That would wrap up transit resources. Took a little bit longer than I thought it would, but there is a lot going on in that fund, and it wasn't all that long ago when that fund was on the perpetual watch list for the city in terms of, we were always monitoring those expenses, but it's doing rather healthy. As you can see, we're anticipating $8.2 million ending fund balance. So when we look at the resources, or we look at the requirements here, again, we'll break it out by the major cost categories, personnel services, and that includes wages, benefits, overtime, all that wrapped into that number. $3.9 million. We're coming in under budget because we left some capacity room in there if we were going to expand service under that STIF money that we are pushing off until next year. There's also vacant supervisor position. There's a TDM coordinator open, and overtime has been reduced in this pandemic-oriented transit world we live in right now. So coming in under budget. Materials and services, the same thing. A lot of it, is grant dependent. So to the extent that we have reduced the materials and services, it just means that it'll be applied towards the grant when we use it in the future, when that happens, when the time comes to need those materials and services. Just kind of a point of interest within that $2 million, $1.2 million of that is fleet related, and that's the fuel, the tire changes, the maintenance for those buses, as well. There's a $370,000 charge that we contribute to TriMet for the operation of the West train. Capital outlay, $1.4 million. We've taken delivery of one 35-foot electric bus this year. It's $800,000. We've got a couple other buses on order, that probably, or they may or may not come before June 30th. To the extent they don't come, we're going to reduce that revenue you saw up in federal intergovernmental revenue. So they're kind of connected. Unfortunately, there'll be no trolley. We haven't been able to secure a trolley that can be reimbursed by a federal grant. So that has been taken off, right, at least at this point, for budgetary purposes. So transfer out overhead is what I was talking about. This $585,000 is transit fund's contribution to the general fund for all the HR work they need. That's all the recruiting of the drivers, the training, the accounting work, the legal work, all that is handled in the general fund. This is the reimbursement to that. Transfers out to CIP, I mentioned how some of the operating funds will contribute to the CIP fund to build something. They had anticipated building some shelters this year or replacing shelters. Most of the shelters are on some kind of replacement schedule that will not be taking place for a variety of reasons. And so they are really estimating almost no year-end estimate for capital outlay, for capital projects. So long story, we see an increase of $579,000 in an ending fund balance of $8.2 million. So at this point, I'm going to turn it back over, or I'm going to turn it over to Catherine Smith, our Assistant Finance Director, and she will go through a couple more funds. She's going to take you through some of the utility funds.
Thank you, Keith. A moment while I share my screen. Okay, good evening. I'm Catherine Smith, the city's Assistant Finance Director. Next, we're going to take a peek at the Public Works Funds. First, the Road Operating Fund. I want to make sure that you can see my screen. Okay. The Road Operating Fund accounts for the city's allocation of the state's gas tax and is used for the repair and maintenance associated with streets. The state gas tax is 38 cents per gallon, of which a portion is allocated back to cities and counties based on city population. The biggest operational threats to the city's road operating fund are from people driving less and or driving more fuel-efficient vehicles. This fund is starting with a balance of $2.8 million and ending with a balance of $3.3 million, up $500,000. Resources here are currently on track due to favorable results from the prior year. You can see here there's an ending variance of a 9% favorable increase. Yes?
And was that because we were a little conservative with our budgeting? Because at that point, I'm trying to remember, I mean, when we set our budget last, we were in the pandemic and had seen a decrease in vehicle activity. And so did we choose to set it smaller for that reason? And it's come in, or what accounts for our beginning fund balance being higher than we anticipated? You know, like, I guess my question is, did we actually have a higher amount of the gas tax given to us because people were driving more than we had anticipated?
Right. No, I don't. I do think we saw a slight dip in gas tax in 2021, which would be reflected in that beginning fund balance. But we also had a reduction in expenses the prior year, and that's what rolled forward. Part of those reduction in expenses were delayed CIP projects, as well as because some of those road operating funds would flow into CIP projects. So I'd have to go back and do a little bit more extensive research, but that's essentially it. There was lower expenses, yeah, and it may have been a concerted effort within the operating of that fund, as well as the use of that fund for capital improvement projects.
And we also had an increase in population, which would have made the revenue go up. I don't know how significantly, but it is state shared revenue, and our population did go up. And every year Portland State does its census estimates for every jurisdiction, provides that to the state, and that's how we set our state shared revenue, whether it's gas, liquor, or tobacco sales. That's how we get that revenue, based on population.
And the gas tax did go up on January 1st of 2022.
Yeah, it was 2 cents.
2 cents. And I don't know how that, goes into a box and then gets allocated out. But as Catherine mentioned, definitely the road operating fund in general, which pays for the operations of the road, when we're on this trajectory with greater and greater fuel efficient cars or electric vehicles that don't use gas. So at some point in the future, I don't know how far off that'll be, probably 5, 10 years, something will have to come to reconciliation with that nexus of how you improve the roads if it's not going to be gas tax anymore. But for right now, it looks like we're pretty healthy.
Yeah. Okay. Thank you.
So in personnel, we're still on track here due to, we still have sorry, I got off track just for a moment here. Still anticipate a savings here in personnel. As Keith mentioned, we've had some estimated savings in personnel across the board. Materials and services, also some anticipated savings across the board here as well. In transfers, any uncompleted and streetscape projects will be rolled forward to the next year, and transfers to facilities includes preliminary architectural work on the Public Works complex.
Catherine, sorry to interrupt, but one thing I did want to point out here, this unappropriated ending funding balance, that is wrapped up in the city financial policies of a reserve fund balance. Actually, it is noted there. So within each one of these operating funds, it's a council issued part of the financial policies that 20% of that fund be retained. And you can see the fund has a reserve balance of $2.4 million. So it's definitely meeting the council designated reserve component, and it's relatively healthy.
Absolutely. Which brings us to an ending fund balance of $3.3 million.
Council President Akervals.
Thank you. Just kind of a follow-up. So our revenues were higher because our ending fund balance was higher because, well, maybe multiple reasons, but one of them could have been that some projects were not completed then, right? And now I see that perhaps any uncompleted streetscape projects will be rolled forward to the next year. So are we behind on some roads? Is staff able to kind of jog our memories on if we're behind on some road projects here? Is this something that's part of the supply chain issues or other issues, or do we need to eye on some of these projects to make sure that they get completed?
Part of it would be, we were talking about the vacancies in staff here at the city, and some of that vacancies, or a lot of that, was in our community development area. Engineers in particular is one of those professions that's very hard to hire for right now. Luckily, and I think Brian can touch base, I think they're finally fully staffed with engineers, and that's what kind of triggers the movement on a lot of these CIPs. They're project managers.
We're actually down 2 engineers. Here's what I'll say on the capital side. no one budget is ever going to have the same reason for why some. I mean, typically the way we do capital projects is we have a 5-year capital improvement plan. When it gets to about year 5, that's when it moves into the design portion of it, and then you go into the construction portion, right? So any project could be delayed for any number of reasons. It could be related to a lack of resources. It could be that the design took longer or was more complex than we originally thought it would. It could be that we only got one bid for a project and we didn't feel comfortable with it, so we delayed and went back out. So I would say that it's hard to pinpoint any one particular thing, but in terms of our overall street maintenance program, I can tell you, and you know enough because you live in this community, and if you compare it to other communities, we do a very good job of maintaining. Every year we have a pavement index program. It directs us to which streets need attention, and then we move those through the process. So I would say that, yes, there are some instances where we have projects that fall behind. No, there's no one particular reason why that might happen. But in terms of maintaining our assets, we are definitely keeping up with the Joneses, so to speak. We're maintaining our stuff at a very high level.
Okay. Thank you.
Remaining public work funds are enterprise-type funds. Enterprise funds are self-supporting funds that sell goods and services to the general public for a fee. These 4 funds combined are anticipated to recognize $21.6 million in charges for service revenue in the current fiscal year, including approximately $1.4 million in water sales to the city of Sherwood. The city serves approximately 6,500 utility customers and processes around 85,000 payments a year. The first of these 4 funds, the Water Operating Fund, is dedicated to operations, maintenance, and debt service on the city-owned water treatment plant, water wells in the reservoirs, transmission, and distribution system. This fund is starting with a balance of $21.3 million and ending with a balance of $21.4 million, up $163,000. Resources are currently on track. This includes over $9 million, as illustrated here, in current year revenues, which includes $1.4 million in sales to Sherwood. As illustrated here, an overall 5% increase due to favorable results from the prior year. There are 2 programs housed within this fund, water distribution and the water treatment plant. Water distribution is responsible for the distribution system after the water is treated at the plant. The work is completed by city staff, whereas the water treatment plant is outsourced to Veolia. Requirements are on track. Within the water distribution program, there's a slight savings in personnel due to 2 current position vacancies. And in materials and services, there's a slight savings in contracted services and infrastructure maintenance due to availability of materials. As such, we will not be performing as many annual small meter replacements.
Question from Member LaGarza.
Yeah. Thank you, Mayor. I just had a quick question just to make sure I'm following. This would be one of the contracts that may be subject to the inflation rate, and their increases to that contract would be based on the consumer tax index or whatever we base that on. Is that correct?
Yes.
Yeah.
Okay. And we haven't really seen that yet. Then that's maybe
that'll come up in our budget meetings in May when we budget for next year.
And I think I would like to pause on that question and ask Delora to speak to that, because there are some contractual language in there containing cost escalators. So we're going to elevate her to answer that question since she is the subject matter expert on it.
Yeah.
All right. Hello. Yes, Yes, so for both Veolia and Jacobs, the water and wastewater treatment plant, we do a split of a CPI and an ECI. CPI for the Consumer Price Index of the West Coast, Class A cities, and then the ECI for an employee cost index. So we do kind of a hybrid of both of those. And what the numbers that we use, our contract renewal is July 1 of every year, but we look at the previous 12 months of January to December. So for when we renew both of the contracts coming up here in July 1, we'll be looking at what the CPI and ECI were for 2021. And right now, I don't have numbers off the top of my head, but they're probably pushing around 3.5% or to 4%.
You might as well stick around, Delora, because the next funds are yours, so.
Okay.
Included here, and we're moving now to the water operating fund requirements. Included here is the water treatment plant expansion, a $25 million project funded 33% by Sherwood. The city recently went out for debt financing to cover the SDC portion in the amount of $7 million, the balance of which we just received, which brings us to an ending fund balance of $21.4 million. Any questions here with the water operating fund? No? Excellent. Okay, perfect. This brings us to the sewer operating fund. Is dedicated to operations, maintenance, and debt service on the water treatment plant and collection system. The fund is ending with a balance of $16.95 million, down $36,000. Resources are currently on track. There are 3 programs housed within this fund: wastewater collections, industrial pretreatment, and the wastewater treatment plant. Within wastewater collections, current year savings are seen here within personnel due to a current position vacancy. Materials and services, savings in supplies and contracted services, and within capital outlay due to longer than expected lead times. We inspect the Vector truck split with Storm to be delivered next fiscal year. Next, requirements within debt service. You may recall this $22 million debt service was refinanced this last year to the benefit of a lower interest rate, which brings us to the ending fund balance of $16.9 million. Are there any questions surrounding the sewer operating fund? Okay, then we will move to the stormwater fund. It is dedicated to the maintenance of the city's stormwater detention and diversion system, and may also be used to pay for construction of improvements in developed areas of the city. The fund is starting with a balance of $5 million and ending with a balance of $5.2 million, up $140,000. Resources are on track at a rate of $11 $11.90 for residential. No change from the prior year. Overall, this increase is due to favorable results from the prior year.
I have a question on that one. Oh, and maybe it might be on the next slide, but could Ms. Kerber talk about the stormwater master plan that we've talked about and how that might fit into this upcoming budget?
Yeah, so right now we're in the process of doing a stormwater master plan, and that will help inform what future capital improvement projects or major repair and maintenance projects that we need. So right now we're kind of sorting out and prioritizing, and then the next step will be after the master plan is done is to look at the user rates as well as the SDC rates to determine how that's going to be changed up. As you know, over the last couple of years, we've had some major stormwater issues. So this is a great opportunity for us to start looking at what are those items that might be out there coming up so we can better, get a handle on them.
Thank you. Councilor West?
We had that, I believe it's a stormwater issue that happened in Charbonneau. We had kind of that unexpected construction happen. Was that this budget cycle or was it the previous one? Is that in here?
No.
And when we look at that, like you had just talked about, Delora, are those the type of things we're assessing to hopefully avoid?
Yes. So the one you're talking about was the storm line that ran along Miley Road there to the south of Charbonneau, and we did take care of that one. But what the master plan is telling us, and interestingly enough, the previous master plan had pointed out that was a potential area. And so, yes, that's exactly what we're trying to do is identify the areas around the city that have challenges and try to get on them before we have to do an emergency repair.
And that particular project was actually, I believe, if memory is correct, was 2 or 3 fiscal years ago. Time flies.
Yeah, it could have been probably 2, yes. Yeah. Yes. So, yeah.
Any other questions here? The balance of requirements here are also on track. Vector truck split with storm is anticipated to be delivered next year due to longer expected lead times, which brings us to the ending fund balance of $5.2 million. Next, a street lighting fund is dedicated to pay for street lighting costs. The fund is starting with a balance of $1.2 million and ending with a balance of $387,000, a decrease of $867,000. Resources here are on track.
Could we pause on that for just a second? I would like Delora, just for the citizen members of the budget committee, just to talk a little bit about our LED streetlight conversion and how that probably will down the road impact this fund in terms of the charge that we assess for streetlights. If you wouldn't mind doing that, Delora, just real quick.
Oh, that's why I raised my hand, because yes, how exciting. So we have, we're doing conversion from either high pressure sodium or mercury vapor lights to LED lights. And we'd already done phase 1, which was hitting all the arterials or the Cobra heads, that we converted those. So that's great. And just within the next month, we are releasing a bid out to do more neighborhoods now, and that's phase 2. It won't complete all the lights. Phase 3 will complete the rest of the lights in the neighborhood. Excuse me. And so once all of those LED conversions are done, Then the next step will be to revisit what is user rate for the lights. So right now, the user rates are kind of depending on what type of light you have in your neighborhood. But once we get the conversion done, we'll be able to do a more uniform rate, and likely it'll be a lesser rate, because LEDs have a longer lifespan before you need some major maintenance or repair to them.
Well, that is an unusual direction to go for rates, isn't it? So that's something.
Yes.
Very good.
Yeah. So we're very excited about, moving forward with phase 2. Then we'll need probably at least a year to help gain some more funds before we can do phase 3 and complete the rest of the city.
And just fun facts surrounding phase 2. Phase 2, we anticipate will result in an annual energy savings of roughly 342,000 kilowatt hours for the city's street lighting network. The project equates to an estimated annual cost savings for the city of roughly $39,000 in energy costs. So great job on that. Which brings us to an ending fund balance of $387,000 for the street lighting fund. Any additional questions surrounding street lighting? Excellent. Well, thank you. I will turn it back over to you, Keith.
Okay, we're on the final stretch here. We have a few more exciting funds, 3 more funds. We have the Building Inspection Fund, and this fund is dedicated to the administration and enforcement of the building codes in the city. Very important. This is one of those funds that is required by the state of Oregon. We have a beginning fund balance of $2.3 million, and we are anticipating an increase of $520,000, which will result in an ending fund balance of 2.8. And you can see they've really had a very strong quarter 1 and quarter 2, and that was kind of foreshadowed in the comments earlier tonight with just the enormity of the development happening out at Frog Pond, and we have those 3 warehouses here being built in the city, and the $24 million expansion at the high school, and the $58 million expansion from the state of Oregon, who's redeveloping the old Microsoft building, as well as the Twist Bioscience building. All those buildings need to be permitted, they need to be inspected, and this is what this fund does with their building inspectors. So it's really looking good. Question?
Oh, I'm sorry. Member LaGarza.
Thank you. Just a question. I'm wondering, a lot of these projects seem like they may carry over, like the Frog Pond may carry over into next year, but then maybe some of them won't. I guess, and with inflation, going up as it is, a lot of these projects, do we anticipate, we'll talk about it, I guess, with the next budget cycle, when we're doing the next budget, but I was wondering, can we anticipate this in the coming years, or are we thinking maybe not quite as aggressive? I'm just curious what we're thinking.
That's really hard to say, and this is another one of those funds that's really hard to budget the revenue sources, because sometimes you just make hay while the sun shines here, and sometimes it's feast, sometimes it's a little bit of famine in this fund in particular, because it's also dependent on the timing of when permits are pulled. For example, they may pull some of these permits in May of this, or in a few months, which will be for development for next fiscal year. So we may see a dip in the revenue next year, but we still have that need for the building inspection costs. And so it's another one of those professions where you want to make sure we retain a solid workforce here in the city for when future development wants to happen. But as far as development going forward, Frog Pond has a way to get built out, certainly, and Wilsonville in general is just a very attractive geographical area for development, as well as through some of the economic policies embraced here. So
I would lump, hold on, I just want to make a point, but I would lump the building inspection and the community development funds in the same category, in that the money comes in on the front end and then the work happens on the back end. So we don't have any control over when somebody comes to submit a subdivision application, or a company wants to come in and build a new, spec warehouse. So you're going to see wild fluctuations in both the CD and in the building inspection on the resource side. And we do try to build up as healthy of a ending fund balance as possible, because we could go back to a time like during the Great Recession where instead of issuing 300 residential building permits per year, we're down to 40 or 50, right? So you need to have that big resource buildup to anticipate, because what you don't want to do is get into this constant cycle of hiring, letting people go and then rehiring, because my HR department is exhausted at this point, trying to do all these multiple recruitment. So we are very cognizant of that. So, but it is an issue that it's specific to the building fund and to the CD fund.
Thank you. Member Linville.
Mr. Katko, was this not one of the funds that was on a watch? And I think it was, if it wasn't last fiscal year or the year before, that we were concerned about response and whether we would, I think we added staffing to this department so that we could meet the requirements for the requests and increase our timeliness of meeting building inspection requests.
Yeah, the CD fund CD fund was not the building fund, but we did add resources to the building fund. The building fund has always had a healthy reserve for the reason I articulated earlier. The CD fund has been on a watch list, and both permit fees were increased for the building department because they hadn't been raised in 15 years. And CD, just because we hadn't really looked at those fees very closely either. So they're all tied to the billable hours of the individual employees that do that work. And so we came to council and you approved increases in both the building fund and in the CD fund to capture the true costs of the labor involved for doing those various services that we provide to the development community.
And I was also going to add that this, or when we talk about what our citizens expect and businesses in our city, is they do want a business-friendly environment and an environment where we have responsive, skilled staff who can respond when somebody is coming in to meet with them about a building permit and exploring that. And so that is also made possible by trying to, keeping good staff as best we can.
Yeah, so on the very topic of keeping staff while we can, there is a budget variance in here. There's 3 staff vacancies actually in this department, so that's part of the reason we had a huge influx of revenue here, and we also kind of had a dip in personnel savings. However, the need has been so tremendous that they haven't sat still. They've gone out and contracted through agencies to serve that, niche of getting building inspectors in here to, like the mayor said, is we want to promote an economic engine here for when development wants to come. We want to be prepared. So they have 3 staff vacancies. That is a little bit strain on the department, but they've supplemented that through outsourcing some of the building inspection. So, and the outsourcing goes into the materials and service budget. So it kind of nets.
Councilor West.
It's my understanding that contracting services can be actually, it is in the long run more expensive. Do you guys, once we fill those positions, will that be an additional savings because we won't have to spend that expensive cost for contracting?
Yeah, absolutely. It is a little more expensive, or sometimes a lot more expensive to contracted services, because there's this profit margin is built in on every aspect of bringing in a contracted employee in here. So, yeah, and then, when we get into the budget in May, we'll have Dan Carlson, the lead building inspector director here, and he can address that a little bit more in detail for sure. Hopefully we'll be fully staffed by then too. Otherwise, this fund is going to end $2.8 million. They're up $520,000. Kind of like Brian mentioned, we got this money, but a lot of that work may be next year, and we don't always know when those developers are going to come in with a $100,000 development permit to inspect whatever they've got. So it's a fund. All the funds are on our watch list, but the building inspection fund, usually moderately healthy, so not as on the watch list as our next fund, which is the community development fund. And this is a fund set up by city policy to track revenues for development purposes. That's engineering permits and planning permits, to make sure that is a self-sustaining endeavor here in the city of Wilsonville. Again, it has kind of the same mirror of the, in terms of revenue as the building inspection. We had strong permit activity coming in Q1 and Q2. They get sometimes they get grants from, a lot of times they're state development grants from like Metro or whatnot. And so those have come in, and we're anticipating that right on track. So other than that, and then for all resources in general, up 3%. So we started out with a $2.6 million, and this fund is being reduced a little bit in terms of the estimated ending fund balance. But that was predicted, and that was predicted when we budget for it. It's planned. Again, it's kind of like what Brian said. It's like some years we'll get that revenue in, we'll have the expenses the next year, and vice versa. So it's a shifting fund, and we do keep our eye on it to make sure it is being self-supportive. So, if there any more questions on the community development fund? If not, we can move into the city's. Well, I should say in the Community Development Fund, too. That is dedicated to the civil engineering here at the city, the economic development, the planning, urban renewal management, and stormwater management, and all the natural resource management, too. That all is self-contained in that fund. Whereas, as we move into the general fund, the general fund accounts for resources devoted to support the services associated with the local government, and that's where law enforcement is, the library, parks and rec, building maintenance, facilities, public works administration, the administration of the city, the legal department, finance, and HR. Those are the general core services of the city located in this fund. And the main revenue source is property tax collections. And we are seeing pretty much on track. Budget was probably a little bit overestimated, so that is primarily on track, $8.2 million, which we receive in property taxes every year. Hotel motel taxes picking up. We're anticipating $330,000 from a budgeted number. That is one revenue source that did dip down in the previous years, of course. Less hotel stays here in Wilsonville, but it is picking back up. Franchise fees is a big revenue source here. That's on track. That refers to giving the right to certain franchises, such as the electric, to PG&E, to lay their lines across city property and whatnot. So there's a natural gas franchise, there's PG&E, and that gives them right to access the right-of-ways here in the city. One other kind of interesting reduction, we do have a reduction in municipal court fines, but it is still a self-supporting endeavor, and we are starting to see an uptick in ticket writing as well as court fines. One other kind of comment here. This $2.8 million, those are what we kind of talked about earlier, the indirect charges coming back in, because we charge out this fund a lot to other departments, especially for accounting, HR, and administrative fees. So those are the charges that were mirrored in expenses in other funds coming into this fund. This loan repayment, transfer loan repayment, you may recall this was an overnight loan to the urban renewal, two of the urban renewal funds. It's kind of a financing strategy where in the urban renewal funds, we're only able to access that tax increment through debt financing. So instead of going out and spending the money on a bonded debt, we're able to overnight loan ourselves the money, or the urban renewal agency gets paid back the next day, and then the urban renewal agency has access to those tax increment funds. And we are on a trajectory for two of those urban renewal funds to close down. It'll be probably another year or two for those. So we start out with a beginning fund balance of $16 million, and we are anticipating an ending balance of $17 million. I should go back, because this is one of the most interesting things about this fund. Intergovernmental revenue, $5.2 million. Within that number, of course, is the $1.4 million in Clackamas County Library money received. That's the state shared revenue. We get cigarette tax, we get alcohol tax, all that flows in there. But what's new this year is $2.8 million the city received in ARPA funding, and that's only 50% of that. We should be getting another $2.8 million. Probably it'll fall into next fiscal year. So that has really bolstered this fund, and there will be a decision-making process that has to happen as to how we spend that $2.8 million this year and the $2.8 million next year, or the combined $5.6 million, or whatever it actually is. We do have to report that to the federal government as to how we spend it, and we do have to spend it. It can't be put into fund balance, and we do have specific deadlines of when that has to be spent by. We have a lot of freedom, or a certain amount of freedom, in terms of that can be spent on traditional type of governmental services that we are allowed to spend that money on. Some of that has already been earmarked in terms of, I believe we're covering some of the additional janitorial costs that the city has incurred because of COVID, so the additional cleaning of the parks departments, facilities, and such, as well as, offhand, I can't think of all the other particular earmarks, although there possibly was one with the behavioral counselor.
A behavioral health specialist that we contracted through Clackamas County to serve the Wilsonville community on a contract basis for the next 3 years.
But what that has really done is really bolstered at least the general fund ending fund balance in the short term. Like I said, we're really remaining constant here. $16 million beginning fund balance. We anticipate fund balance of $17 million at the end of fiscal year 22, and we'll receive another $2.8 million allocation from that ARPA money in the next, when we come back in May and budget for next year. So going through, we can go through these rather quick. I think these are all like the admin department. Most everything is on track. There's vacancies, in a variety of departments, including the finance department. We're down an accountant position. We're actually down 2 positions, an accountant and an accounting tech. So we have savings there and various materials and service savings. IS department, we're down a network administrator so we have savings there, but that is one of those positions that we need to be filling as soon as we can. But we're anticipating, some budget savings there, at least in the short term. Legal department, pretty much right on target. HR, they've had a vacancy for a couple months, created some savings. Law enforcement is on track. Every year we have a contracted amount that we pay, and so it's pretty standard. Court, municipal court, we operate at about $175,000 to operate the court. We have an employee and a judge we pay, as well as some materials and services. But you can see we're savings because we haven't had as long as court nights, or some nights we've even skipped courts. We generally hold a municipal court here twice a month at night. Public Works Administration that has some EOC budgeted amounts that looks like they were going to be deferred until next fiscal year. Facilities, we have had vacancies created here that is creating some budget variances, and that's kind of true almost in all these remaining departments of vacancies of some sort. As the configuration of employees changes too, we've had some retirements of some well-established employees who are leaving, and they're coming in at different rates and different benefit configurations, and just vacancies in general. Library, right on track.
I have a question before you go much further. It was back a little bit regarding law enforcement. Do we have somebody available who can talk about the investment in another, more personnel there that I think is part of the plan, maybe the timing of that?
Are you referring to the behavioral health specialist that will be attached to the police department?
No, I thought we were looking at another deputy.
No, that's not in the immediate plans. Chief Werps has done an analysis of staffing needs and shift coverages and making sure that he has adequate supervisory capacity for all of his various shifts, and he's not recommending any new additions of deputies. As you recall, we did add a second traffic unit 2 fiscal years ago. And so because we live on I-5, we're bifurcated by a freeway, and one of the number one complaints we get is citizens complaining about speeding in their neighborhoods. We did add that second traffic unit, but there's no additional staffing in terms of sworn deputies at this point.
Okay, thank you.
I will say, though, on the behavioral health side, it is one of the things that really drains the resources of the PD. They do a lot of welfare checks and medical or mental health related calls. So the addition of that will free up a lot of capacity for those sworn officers to do more like driving through communities and more traffic enforcement and stuff like that. So that will be, that'll add more capacity in terms of what they, originally got into their profession to do. So I think they're all very grateful that City Council approved that appropriation.
Oh, Councilor West.
Quick question. When we see that behavioral health specialist, are we going to see that on that line item for the police officers, that $5 million, or is that going to go, or we're going to see that designated somewhere else? Yeah, is it going to be under law enforcement as a staffing?
Yes.
Or is that, or will we, yeah, okay.
That's correct, Councilor West. It will be under that contract services for law enforcement.
Do we know approximately like what that additional staffing cost will be?
I don't have it off the top of my head, but it was a 3-year pilot. I want to say roughly with all the roll-up costs, training, vehicle, I think it was right around $180,000 a year or something. What's that? 180? 190. $190,000 a year.
Okay.
Well, I'm glad we're adding that position, and I know that will help the police department, the sworn officers work in the other areas.
And that was one of the positions funded by that ARPA grant funding that we received that we will have to report on how we expense it. So a small portion of the ARPA funding. So that kind of wraps it up down to, we'll have an estimated ending fund balance at the end of the year of $17.3 million, and that's where we'll start the budget for the general fund for next year. And our budget meetings we anticipate having the budget book out to you all on April 29th. That gives you, I think the tradition here has been to give you 2 weekends, as much as everybody likes to spend their weekends reading a 400-page budget book, but it gives you that adequate time, at least 2 weeks before that first budget committee meeting that's scheduled May 18th which I believe is the anniversary of Mount St. Helens. And then May 19th is our second meeting. Traditionally, we've wrapped it up in 2 budget meetings. If we need a third, it'll be May 24th. Once it gets approved out of the budget committee, it gets elevated to the city council, who also deliberates on the budget and can make amendments as such, and that will be anticipated to be approved on June 6th. And then we will have a budget for our next fiscal year 22-23.
And I would add, for all of our budget committee members and city council, we've always said in the past that as you go through the budget document, if you have questions, the most efficient way to get that information is to email Keith Katko or myself. We like to get those questions in writing so that we can have the question and provide a written response, and then we distribute that to all the members of the budget committee at the same time. If you wait till the night of the budget committee meeting, we might not have the answer like right at the tip of our fingertips. So the sooner you get us those questions and we can formulate written responses, we make sure that everybody gets the responses at the same time. And we welcome any input on Scrivener's errors or grammar or anything. So whatever you have, send it our way.
Well, thank you. We really do want your input and curiosities, anything that you, especially our citizen committees and everybody on this committee, you may see something that looks like it needs better description, or it just isn't ringing out why we're doing that. Please ask the question, because that will help us illustrate that. And also, at our next meeting, we will be electing a chair of this budget committee.
Yeah, that's correct. So that's it for the finance presentation, Mayor. Brian, did you have any concluding remarks?
Nope, just thank you for your time. And if you have any questions right now, we'd be happy to answer them about the budget process or about anything that you heard tonight. I'll turn it back over to the mayor.
Yes, I'm looking for raised hands. I sometimes don't see them, especially if you have yellow walls behind the little hand. But it looks like I don't see any raised hands. So thanks very much. And once again, you can email Finance Director Katko or any of the counselors, city manager. They're all really helpful. And I always find they are just great at adding background. If that's all there is, I will adjourn this mid-year review and budget committee meeting. Thank you. Meeting adjourned.